The purpose of this video is to help you analyze the effects of business transactions as well as to understand the basic accounting equation. Do you remember the basic accounting equation? You're probably right. That's assets equals liabilities plus owner's equity. Now, what are assets? These are what the company owns that will give future benefit to the company. For example, cash, building, property, land, accounts receivable. Now, what are liabilities? Liabilities are what the company owes or what the company needs to pay, or it's like a debt, or in layman's term, it simply means utang. So what are examples of liabilities? So we have accounts payable, notes payable, and we also have accrued liabilities. Now, what about owner's equity? What do you mean by owner's equity? Equity is the residual interest after the liabilities have been deducted from the assets. Examples of owner's equity are capital, withdrawals, and income summary. Now, to better understand the concept of the basic accounting equation, let's have an example. Let's go back. Asset stands for A, L stands for liabilities, and OE stands for owner's equity. So, for example, you have a liability of 5,000 and you also have an owner's equity of 3,000. How much is your asset? So simply, just look at the equation. So to get your asset, that's liabilities plus owner's equity. Therefore, 5,000 plus 3,000 is equal to 8,000. Therefore, your asset is 8,000. Now let's have another example. What if you're given an asset of 10,000 and the liability is 1,000? How much is the owner's equity? It's very simple. To get the owner's equity, you have to deduct the liability from the asset. So the formula is asset minus liability equals owner's equity. Therefore, 10,000 minus 1,000 is equal to 9,000. And for you to check if your answer is correct, go back to the original equation. Asset equals liabilities plus owner's equity. So liability of 1,000 plus owner's equity of 9,000, is it equal to the asset of 10,000? Yes, they're equal. So you have to take note that the value in the left side of the equal sign, which is the asset, and the value of the right side, which is the liabilities and the owner's equity, should be balanced, should be equal. Now, another example. What if you're given an asset of 4,000 and you're given an owner's equity of 3,000? How much is your liability? Same with the previous equation. So, to get the liability, we're going to use the formula asset minus owner's equity equals liability. So that's 4,000 minus 300 is equal to 3,700. To check your answer if it's correct, simply add 3,700, which is the liability, plus 300 is equal to 4,000. Therefore, both sides, left of the equal sign and right of the equal sign, are the same value, So that means they are balanced and they are equal. Now, let's go to analyzing the effects of business transaction. So going back, you have to remember that every transaction has a dual effect. When we say dual effect, something is debited and something is credited. Now, what is debit? When we say debit, it's on the left side. When we say credit, it's on the right side. Always remember that. Also, to better understand the concept of debit and credit, because it's quite confusing, you have to remember of value received and value parted with. What are these terms? When we say value received, that simply means whatever you receive. When we say value parted with, it's like what you have given up. So, to better understand that also, let's have another example, a very simple example. Imagine you want to buy candy. You want to buy 5 candies. So you went to a store. So in order for you to get the 5 candies, what will you give to the seller? Of course, you will give your money. For example, if each candy cost 1 peso or 1 peso, so how much are you going to give the seller in order for you to get the candies? You're going to give 5 pesos. So going back, when you give your 5 pesos to the seller, what will you receive? What's the value received? You received the 5 candies, and you have given 5 pesos, which is your value parted with. So let's have concrete examples in accounting, in analyzing the business transactions. So for example, Anna decided to open her new laundry business named XY Company on October 1, 2020. The following transactions occurred during the month. October 1. The owner invested 180,000 pesos and deposited the money in the bank in the name of the company. By the way, in analyzing the transactions, you have to put your shoes on the side of the business. It's like you have to imagine that you are the business itself or you are the accountant of the business. So, going back, when the owner invested cash in the business, what happened to the cash of the company? What happened to the cash of XY Company? So it simply means, what did XY Company receive? XY Company received cash. Does XY Company already have cash initially? No. So that means from 0 plus the investment of cash of 180,000, so it becomes 180,000. So what happened to the cash? Did it increase or did it decrease? So the cash increased. So your value parted with, when you invest money in a business, aside from cash, you will also have your capital. So does the business already have capital? Not yet. The business has 0 initially, 0 capital, but when the owner invested the money to the business, it becomes 180,000 pesos. So what happened to the capital? Did it increase or did it decrease? It increased. Second transaction. On October 4, the company bought laundry supplies for 25,000 pesos. So same with our scenario in a store. So when the business went to a store and purchased laundry supplies, what did the business receive? What is the value received? The value received is or are supplies. Does the company already have supplies? No. So initially, the supplies of the company is 0. They don't have any supplies yet. But after they purchased the supplies worth 25,000 pesos, so that's 0 plus 25,000, so that means it's an increase for supplies. Now, for value parted with, what the company has given up in order to receive the supplies? They have given up cash. How much? That's 25,000 pesos. Question: does the company already have cash? The answer is yes. When the owner invested cash to the business. How much was it? That was initially 180,000 pesos. So from 180,000 pesos, and then 25,000 from that was used to pay for the supplies. So that's 180,000 pesos minus 25,000 pesos. That's equal to 155,000 pesos. Now, what happened to the cash? Was the cash increased or was it decreased? Of course, it was decreased. So again, going back, if you notice, there are two transactions. Because going back to the rule, the golden rule, every transaction has dual effects. It has a debit, it has a credit, or you will have a value received and value parted with. Now let's go to the next transaction. In October 9, the company acquired a motorcycle for 73,000 on account. Now you have to remember, when we say on account, did the company pay cash or what? You have to take note of these two words. On account means it's not paid yet. That means the company is indebted. So going back, let's analyze the transaction when the company acquired the motorcycle. What did the company receive? The company received the motorcycle. Value received or the debit is a motorcycle. Initially, does the company have a motorcycle? No, the company doesn't have any motorcycle yet. So that's from 0. And then when the company acquired the motorcycle, so that's plus the value of the motorcycle, which is 73,000. So is it an increase or a decrease? It is an increase. Now for the value parted with, what did the company give in order to get the motorcycle? There are actually a lot of ways to acquire something, but you're not giving up cash, or you will not give cash right away. There is what we call notes payable, like a promissory note. We also have accounts payable. It's also similar with notes payable. It's just that you are not promising anything. So from here, what we're going to use is accounts payable. So your value parted with is accounts payable. Now going back, does the company already have accounts payable? No, the company doesn't have any. So that's from 0 plus 73,000, which is the value of the motorcycle. So that is an increase. Next transaction, October 15. Washed the curtains of waterfront hotel and billed the customer 5,000 pesos. So, also, I'd like to emphasize this transaction. Before we answer this, you have to take note, or you always have to remember to find out first what's the nature of the business of the company. Remember, we have three types of business. We have service, merchandising, and manufacturing. Why is it important for you to know the type of the business of the company? So that you will know what specific element of the account you are going to use. Whether, especially when we talk about income, whether you're going to use service income or service revenue, or is it sales, or what? So for this one, because going back, Anna decided to open up her laundry business. How can you classify the laundry business? Is it a service company? Or is it a merchandising company? Or is it a manufacturing company? You're probably right. That's a service company. Therefore, going back to October 15, the company washed the curtains of waterfront hotel and billed the customer 5,000 pesos. So the value received is accounts receivable. Why accounts receivable? Because if you analyze the transaction, did the company receive cash? No. But because of the word billed, that means XY company or the business of Anna has to receive an amount from Waterfront Hotel someday or at a specified time. That is why we are going to use the element accounts receivable. So, does XY company already have an accounts receivable? No. XY company doesn't have any accounts receivable. So that's from 0 plus 5,000. So what happened? Is there an increase or a decrease in the accounts receivable? There is an increase. Also, for the value parted with, since XY company or Anna performed service, washed the curtains of waterfront hotel, so the value parted with is service income. So going back, does the company already have service income? No, the company doesn't have any service income yet. So that's from 0 plus 5,000, it becomes 5,000. So what happened to the service income? Did it increase or decrease? It increased, of course, because that's from 0, it becomes 5,000, so that's an increase. Now, next transaction, October 20, washed the bed sheets of Shangri-La Hotel and received 2,500 pesos. So what's the value received? After washing the bed sheets, the company received 2,500. So the company received cash. So going back to the balance of 155,000 plus 2,500, it becomes 157,500. So what happened to the cash? Did it increase or decrease? Obviously, it increased. Now, for the value parted with, since the company performed the service, of course, they have service income. So going back to the previous transaction, the company already has a service income of 5,000 from Waterfront Hotel. So that's 5,000 there. And another 2,500 from Shangri-La Hotel. So it becomes 7,500. So what happened to the service income then? Did it increase or did it decrease? It obviously increased. Another, October the 23rd, paid the month's rent amounting to 1,000 pesos. So, what is your value received? You received your rent expense, because that's a month's rent. So, does the company already have a rent expense? Initially, there's none. It's 0. So, when you paid the month's rent, you already have a rent expense of 1,000. So from 0, it becomes 1,000. So that is obviously an increase. Now for the value parted with, since you paid the month's rent, therefore, from your cash of 157,500 minus 1,000 is equal to 156,500. Again, analyze, why are you going to deduct the 1,000? Of course, because you are the one who paid the month's rent. You have taken it out from your cash. Therefore, what happened to your cash? Did it increase or decrease? It decreased. Now, in October 30, you received the payment, or the company received the payment of Waterfront Hotel. So what's the value received? Since you received the payment, obviously you received cash. So from 156,500 plus, how much did Waterfront Hotel owe the company? It's 5,000. So going back, 156,500 plus 5,000, it becomes 161,500. So what happened to the cash then? Did it increase or did it decrease? It increased. Now for the value parted with, going back to the original transaction from October 15. Okay, so see here, supposedly you have your value received is accounts receivable. You have an accounts receivable. But when you were paid by Waterfront Hotel in October 30, of course, you have to also give the accounts receivable. You will no longer think of your accounts receivable because you have already been paid. So when you give out your accounts receivable, so that's from 5,000 originally minus 5,000, it becomes 0. So what happened to your accounts receivable then? It decreased. So I hope this helped you understand the effects of accounting transactions.